talking about another year at least until the Model 2 comes. So the stock really sort of lacks a very clear catalyst over that period.
This is really a year about pivoting from supply constraints to demand constraints, and you're seeing that playing out in the EV market.
Tesla's certainly been a very strong competitor, but they've also been lowering their prices to try to expand their reach in terms of customer base, and that's been putting pressure on their margins.
All that and more. So let's get to it. Tesla stock is up in the pre-market a little over 1%, sitting at $182.70. Tesla seems to be consolidating around that $180 per share moment. Will Tesla rally, or are we destined to go back to 52-week lows?
Let's talk about Tesla first, because it is a driver of the market, if you will. I mean, this is a stock that really does have a lot of influence on certain parts of the market dynamic right now. Do you feel as though this downward momentum that we've seen near to medium term is justified, and how much further could it go?
I think in the near term, I mean, we're talking about another year at least until the Model 2 comes. So the stock really sort of lacks a very clear catalyst over that period. So, there is still going to be some downward pressure in the stock, but, there's risk rewards to the name, and so we're still equal weight on it.
A year, 2, maybe 3. The Model 2, as Colin so eloquently dubbed it, has the potential to break the automotive industry. Regardless of the sticker price, most of Tesla's cars cost around $40,000. But if what Tesla says is true, that the next generation of vehicles will be produced at half the cost that it takes to make a Model Y or a Model 3, there will now be a vehicle for consumers to purchase with the Tesla logo on it that will cost less than $30,000. You want to know the reason why BYD has surpassed Tesla when it comes to battery electric vehicles for the fourth quarter of 2023? It has everything to do with price parity to internal combustion engine vehicles. This next generation of vehicles will blow the doors off the total addressable market, allowing them to compete in that segment alongside BYD and converting purchasers of internal combustion engines to battery electric vehicles. Now, I'm not Bob Barker or Drew Carey, but I guarantee you the price is right. Once you've convinced that internal combustion engine consumer to go electric, they're not going back, people.
If that's the case for Tesla, is it still best in breed with regard to the EV makers out there? The entire industry, every single one of them, from China to the US, everywhere else, has seen some of those publicly traded stocks take a huge hit. Is there a value proposition that eventually comes to fruition because Tesla is, in fact, the best that we have out here on the American side of things, market cap-wise right now, as opposed to some of the EV names perhaps out in China these days?
Industry-leading margins. I don't give a what region you're talking about. Industry-leading margins. Not to mention the fact that Tesla's making money hand over fist. Not only are Tesla vehicles the best in class, but Tesla's manufacturing process is head and shoulders above anybody else.
I mean, Tesla does have a current leadership position here. I think in the near term, we're still talking about slowing deliveries. I think from the broader industry, EVs are a challenge, and that was sort of the focus of our report this morning, particularly from a regulatory challenge. And we'll see what happens with, the White House proposed, apparently changes coming to the regulations that are already out there, which are quite aggressive and probably mean more headwinds for the traditional automakers as they're forced to meet them.
All right, well, Tesla shares tumbling to new multi-week lows on troubles in China, now slowing China shipments and new price cuts in the region, spelling some caution for the year ahead. For more on this, we want to bring in Dan Levy. He is Barclays senior autos analyst. Dan, it's great to see you again. So we've seen the reaction obviously play out in shares over the last 2 days. Concerns about what we're seeing demand-wise in China. Is some of this a bit overdone, or what do you think?
Look, I think what we're seeing playing out is the broader theme that we've been talking about into the year, which is that this is really a year about pivoting from supply constraints to demand constraints. And you're seeing that playing out in the EV market where, and this is something we've been seeing in the back half of last year, especially where you're seeing some questions on demand. What's the sustainable pace of volume?
I'm still not a believer of this switching over to demand constraint situation. I know, Tesla guided a little bit lower to their production goals. They're having to pull lever after lever after lever, seemingly to get more vehicles in consumers' hands. I'm not just dismissing these situations that Tesla and every other auto manufacturer is going through, but I'm in the camp that if the consumer can afford the vehicle, they will purchase the vehicle. Many of the consumers just can't afford to buy the car. It's uber expensive, and the transition of lifestyle change is a little bit daunting. Battery electric vehicle adoption is not going to be a straight line up.
We had continued to monitor, at least for, I want to say a couple years now, a shift in sentiment from some of the consumers within the region towards other homegrown brands, and perhaps why BYD has been able to see their own successes within the region skyrocket and move past Tesla even. How much of it is tied back to that mindset as well?
This is a key theme in the auto industry. It's the rise of BYD and some of the other domestic Chinese that have really figured out the cost dynamics. Tesla has actually fared okay in China. You know, they've generally maintained in the BEV market, call it high single digit, low double digit market share, which is very respectable. It is obviously below where BYD is, where they've been pacing lately at roughly a quarter of the market. So I think there is still room for Tesla to grow volumes, even with BYD doing well.
You think? BYD is competing at a price point in that $20,000, $30,000 range. What, pray tell, do you think will happen when Tesla introduces the next generation of vehicles that are in that same price point? Surprise, surprise, their market share will grow. But it's not like they'll be taking it away from BYD, which is neither here nor there. The more important reason why Tesla needs to be in this segment is to take away internal combustion engine sales. There is plenty for all battery electric vehicle manufacturers to eat in all markets around the world. That's why there's such an opportunity when you're talking about Tesla's potential growth. Expanding factories, building more factories so that they can get to that coveted 20 million vehicles per year. The transition is happening. The real question is, can you get the cost down enough to open up your total addressable market and supplant the internal combustion engine? And while the cost of making these things is predictably coming down, how soon and how much will you be able to profit from the selling of these vehicles?
Europe, US, China. China is by far going to be the most competitive and the most intense. We've seen some price cuts lately, and that's where it's a bit trickier for Tesla versus other regions.
Dan, and we still not seen the worst for Tesla when it comes to the pricing wars and the pressure that will likely put on stock?
There's probably more price cuts coming. This is what we're including in our model. Our view is that, probably continues for at least the first half of the year. We actually have pricing flattening out in the back half of the year. I would say one thing that you've seen change a little bit with Tesla is that as opposed to last year, where there were sort of more open and wide price cuts from them, what we've seen really in the last, call it 6 months, is more, I would call it discrete discounting, other forms of discounting. I think in the US, some of the large price cuts that they did last year were maybe not as stimulative of demand. This is why they're constantly facing this question of elasticity of demand, because the price cuts really hadn't driven the type of volume that they maybe hoped for. And I think where you're maybe seeing a little bit of a pivot is holding the line a little more on pricing rather than the approach last year, which was all we care about is volume. Remember the comment from Elon a year ago that we could theoretically sell cars at no profit? And that view has changed, that, they're clearly being a little more sensitive around the margin line.
Prices will come down, but it's not to compete with other battery electric vehicles. It is to undercut internal combustion engine sales. Any consumer that's on the fence about purchasing an EV versus an internal combustion engine, the lower the price of the battery electric vehicle, the greater the chance that they choose the EV versus the internal combustion engine.
We don't have a lot of winners in our stock list. Coming up with Jeff Pierce, joining us, Senior Manager of Derivatives Trading at Charles Schwab. Tesla and NIO, both down. Definitely something to be said about the general EV market right now that just seems like it's not living up to expectations. Maybe there's just too much competition, it got overbuilt. Maybe there's too many players here at this point, or at least maybe too many publicly traded stocks.
Tesla isn't worried about anybody else's battery electric vehicles. The more, the merrier. Their main concern is getting people that would buy internal combustion engines to buy battery electric vehicles. The best battery electric vehicle on the market, safety, performance, functionality, tech, without a shadow of a doubt, it's a Tesla. But if somebody wants to buy another battery electric vehicle, Tesla doesn't mind. In the grand scheme of things, stealing from the market share of internal combustion engines, the upside seems infinite. I'm trying here, cash register. I really am trying.
We're seeing more and more competitors, some of them smaller names, but some of the bigger names out there are starting to make more EV vehicles as well. Tesla's certainly been a very strong competitor, but they've also been lowering their prices to try to expand their reach in terms of customer base, and that's been putting pressure on their margins. And we're seeing that happen all across the field. And certainly it's it's a costly business to get into. We watch a lot of these companies that are still losing money, having high amounts of debt, and it's a competitive field out there where they have to spend money on R&D, but they're also having to cut costs as well.
Down more than 20% on the year. Apparently, there was an arson attack in the German plant. I mean, it's not a lot really going Tesla's way, really.
Yeah, the electrical fire on the electricity pylon nearby near their Berlin plant has halted production and put a power outage in place. The fire did not spread to the Tesla plant itself, but this is kind of one more bump in the road we've seen over there. If you look at some of the union issues they've had, the 3F Transportation Union back in December started a strike. We know they've had shipping issues with the Red Sea, which caused their production to halt from January 29th to February 12th. On top of that, they've planned to extend this Berlin plant that's down right now. They're hoping to double their capacity to produce about 100 gigawatt hours of batteries and 1 million cars annually. They've been getting some pushback, especially from environmental groups there. Hoping that they don't, disrupt any of the nature that's around there. So they've been seeing a lot of issues. I know that their European car registrations are up. That's been a good sign for the company. They more than doubled their new vehicle registrations in the European Union in 2023. From January to November, those registrations were up over 115%. So those numbers look good. And in terms of expanding this plant and keeping production on time, it's been a real struggle.
Arson here, resistance to expansion there. Regardless of the obstacle, Tesla's gonna get it done. Registrations continue to grow over there in the European Union. You're not going to be able to stop them. You can only hope to contain it. In conclusion, Tesla stock is falling due to slowing EV demand and growing battery electric vehicle competition. Two things I wholeheartedly disagree with. The demand for Tesla vehicles is not waning. The ability to grow the total addressable market is waning due to consumers not being able to meet the purchase price of the vehicle. Methinks that will change with the coming of the next generation vehicle. As for battery electric vehicle competition, whether it be from BYD, NIO, XPeng, Rivian, whoever, name your auto manufacturer, I posit that Tesla is not competing with these brands. The more EVs I see on the roads, the better. The real competition lies with the internal combustion engine. How much market share is Tesla gaining in the overall sales of automobiles? An EV market share. The real battle is battery electric vehicles versus internal combustion engines. And while some people like to put plug-in hybrids over there in the EV field, in my eyes, that's still a internal combustion engine. You can go ahead and lump that over into the dinosaurs of the automobile industry. In a decade's time, the stepping stone will no longer be needed. I know this. You may know this. But until the stock market figures it out, Tesla probably will be suppressed for the near term. Question is, will you be ready when the stock market finally figures out the value of TSLA? That's all I got for you today. Be easy. Peace.